Hey, what's up guys? This is Grant. In today's video, I'm going to be sharing the trades that I did this week. And I'm lucky, this week all of my trades are winning trades. I only did 5 trades, 1 per day. But I don't just want to talk about my winning trades, I also want to talk about my losing trades. So I included a trade that I did on July 8th, which is a losing trade. And in all of those trades that I did, I want to share with you what was going on in my mind when I was trading them. I don't do a trade if I don't have a good reason. So let's see. When I make a trade, I always have my reasons. Sometimes the reason is strong, sometimes the reason is not as strong, but I always have a reason why I want to go in, why I want to long, and why I want to go short. I approach different charts and stocks differently. So now let's look at my first trade that I did on July 8th, which is a losing trade, but I think I had a good reason. So let's take a look at it. This is my ins and outs. I just want to show you basically the time that I got in and the time that I got out, and also the price. This is IGC. This is the same trade as this one, and I apologize for this very unelegant picture. In the future, I'm going to fix this. I'm going to make it much cleaner and easier. For example, I have AMC right here, and you can see that I traded on July 21st. The time is earlier, so obviously I entered a short position, and these would be the prices that I got in. And I'll be talking about the first one, which is my Boeing trade, and this one is a short position. It's a trade that I did, and it was a losing trade. So now let's look at the chart. So this is the closing price on July 7th, and on July 8th it opened low and it tried to rally, but actually it failed. So I got in around 9:46. And I got out around 10:06 right here. I entered a short position, and my price was $226.27 and a change. So it opened low, and it also tried to break that previous high right there, but it failed. And it had this very beautiful engulfing candlestick. Not completely engulfed the previous all of the previous candles, but this one gave me more confidence right there. So when it's kind of like sort of going down, I felt that it was going to go down even more. So I entered a short position around 9:46. And another reason why I went short was because this is the low when it opened, and it broke through that low. So I was really confident that it was going to go low. But 1 minute after, it gave me this bullish engulfing candle, but I had a little bit wick right there, so I thought that sellers were still trying to get in. So that's my reason to get in. And of course, like I talk about all of my trades, I always have a trailing stop. I always have a stop loss. That's why, when it wasn't going my way, I got ticked out, which was okay. And the price of this Boeing is a little bit expensive, so my size was a little bit smaller. So I gave myself a little bit more room to take it. But in the end, it did not go. It rallied and rallied. And another reason why I went short was because this is my 200 moving average right there. And it shows me that it's a downtrend. It's a downtrend. And obviously I was wrong. But my reason was that it's a downtrend, and right here, this got rejected. It tried to rally right here. It got rejected, and it got rejected, and it broke a new low. So I went short, but I was wrong, which is okay. Sometimes you get it right, sometimes you get it wrong. Yeah, that's my losing trade right there, and I had a reason. And obviously right here you see that it broke this 200 moving average. It formed right here like a sort of like a uptrend. All right, now let's go to the next one, my NVDA trade. On July 19th, I wasn't very happy about this trade that I did. Actually, I felt, you are gonna see why. I'm gonna show you the chart and you're gonna see why I wasn't happy. It was a winning trade, but I was not happy about it at all. I made $5, you know, from 7.30 to 7.35. It's a winning trade, but I wasn't happy. Again, now let me show you why. This is the chart for NVIDIA on July 19th, and this is before the split, okay? So I was a little bit bullish, and it sort of corrected for a few days, and this was before the split, so I was a little bit bullish for a while. And it opened, you know, open low, but all of the candles right here, they look very, very nice, especially this one. And what gave me more confidence was that this right here, this is my EMA, and I have the 9 period and the 21 period for this chart. And my faster EMA, it went above my slower EMA right here. So I knew that it was an uptrend. As you can see right here, I got in pretty early. Actually, I risked a little bit. Usually I go in when I have a confirmation, but this time actually I went in a little bit earlier because the faster EMA actually went above. So I thought, you know, let's try it. Why not? So I got in around 9:41 and I got out around 9:53. So let's look at this. Let's look at the chart. As soon as the faster EMA went above, the purple one went above this one, this pink one, salmon one, I got in. I got in right here, which is 9:41. Then it rallied. Oh, very beautiful. The reason I wasn't happy about it was because this part, you know, actually was within the risk. You know, I got in early. I could take this short correction, very short, very slow correction. Actually, when I got in right here, my stop was around here and around there, around this area. But, you know, it went above and above, and they had this one, you know, I was really, really happy. But it was sort of going down a little bit. It didn't go as I planned. And again, like, you know, for the past few days, NVIDIA was going down. And the overall, the big picture was going, you know, a downtrend. So I thought maybe it's not going anymore. It's not rallying. So I took it off around 9:53, as you can see right here. And after that, it rallied. So yeah, that was kind of, sometimes, you know, I was a little bit too careful. And I should have left my trailing stop instead of just got out. That was my mistake. But sometimes, you know, you win, you lose. I still made money. Now, let's look at my AMC trade right there. I had a short position, I remember. I got in around 10:30 and I got out around 11:02. And this trade was not difficult. And basically, I had a trailing stop and it ticked me out. If I gave more rope to my trailing stop, I could have made more. Now let's look at the chart. It opened around $41 and it rallied right here. When it tested that $46.50, it didn't make another high. Actually, it made a lower low and higher lows. So at that time, I was thinking about going short. Even though the big picture right here, this is my 200 moving average. It was an uptrend, but right here, you know, I wanted to be a little bit more adventurous, you know, and obviously my EMA, my faster EMA went below my slower EMA. So my 9 EMA went below my 21 EMA. So that's where I went short. And I had a very clear stop loss. It was somewhere around here. I had a stop loss. Obviously, I wouldn't let it go beyond that. So I entered a short at 10:29, 10:30. Right here, you made this very clear breakout, then I was short. So from here, actually, you know, if I wanted to be more adventurous, I could have gotten around here. But actually, I wanted to break that. I thought about it right here, and it broke here, and I thought about it for another 1 minute right there, and it went above. So I was like, yeah, it wasn't really confirmed. So I waited for a little bit longer until actually it confirmed my trade. So I went in around here when it broke that lower low. So I went short. And I had a trading stop, maybe like 1% or something like that. But it was I still got this portion, and I didn't know if it would rally. And actually, this one one right here, I would have got out because again, this my shorter EMA went above my slower EMA, so I would have got myself out around there. But I got stopped out by my trading stop right here. Sometimes I play safe and I made some profit, and I made sure that the profit that I made wouldn't give it back. So that was my AMC trade. And now let's talk about the next trade, my Ford trade. Ford, I think it was a very beautiful trade. It was the best trade of the week. I got in, I had a good reason to get in, I'll show you on the chart, and I got in around 9:42, I got out around 10:37. And these are my prices right there. All right, Ford, I got in around 9:42 right there. And my EMA still, my faster EMA went above my slower EMA, and I was bullish, and my 200 moving average was going up. So obviously, an uptrend, and I would not go short right here because both of my indicators tell me that I should go long. So it was a beautiful trend, as you can see already right there. I got in around 9:42. We had a breakout right there. I went long, and sort of like when we traced back a little bit, but it's totally okay. It was a winning trade when I got in already. So it rallied. You see, it's just so smooth, beautiful. There's no tracing back at all. Until this volume, it scared me right there. You see that? This volume means sellers, they came in. I always have a trailing stop, but I didn't get ticked out. I sold my position myself. And this time I didn't go 50% out. I just went 100% out because these two candles right here and the volume right here, they are not very good. So, and obviously right here, you see my faster EMA went below my slower EMA, even though the big picture, but I was day trading, so I would not go short position right here, which proved to be right. There's no reason to go short right here, even though you had this, unless the volume kind of you had more volume, you had people, you see that sellers came in and more sellers, and then you can test it. Even that you should have a trailing stop and have a tight trailing stop because it was a very solid uptrend right there. So I got out around 10:37. So right here, when it was about to touch that, that point right there, my faster EMA going below my slower EMA, I got out. I said no, okay, I got profit. I think I should get out. So, I got out right here. So that was a beautiful trade. I captured all of that. I got in very, very early. So it was a beautiful trade. All right, let's go to the next one. I traded WISA and I traded IGC. I dodged a bullet on IGC. Basically, I got in at the beginning. I got in around 9:30, and I got out 1 minute and 20 seconds later. I got out. About 18 seconds later, I got out again. And now I'm gonna show you the chart, and you're gonna see why I dodged a bullet. IGC chart right here. As you can see that on 22nd, closed around $1.40, and then July 22nd, it opened high, like 300% higher. So I thought, hey, let's get in. It was one of the most traded stock. So I longed it. I longed this, but I got out really quickly because right here, there's a huge rejection right there, huge rejection, and I did not like this. I did not want to take the risk because, if buyers wanted to buy this, I felt they should have bought it in the very beginning, and the people, because they wanted the price to be low, and the buyers, they would go in and buy them. It's because that strong willingness of buying wasn't there, so I didn't want to stay for too long. And obviously, as you see right here, I sort of made another high right here. Actually, I wanted to jump in again. I didn't, which, good, great, good stuff. And you can see that it's not good. I still didn't get out all of my position. I took 50% off. Basically, I wanted to have some profit, and I was still hoping that it would rally. But unfortunately, it didn't. So that's what happened right there. All right, the last trade of this video is WISA right here, and I think it was a pretty good trade as well. I got in around 9:49, and I got out 50% of the trade around 9:58. Got out the rest of my 50% 1 minute after that, and I got in around $6.25, and I got out around $6.66. Okay, let's look at the chart. Again, you see my reason, because this candle looks very good. And the volume, before lower, lower, more, and more. this volume picked up, and I thought, hey, let's try it, and it had a breakout. It broke that previous high right there. So it was an uptrend. The longer trend, my 200 moving average is going up, and I am going long. I'm not going short. And that's why I didn't take the short position later. With my 30-second time frame, I saw the volume was really, really peaking. So I was a little bit worried. So I took 50% off. The next one, I didn't feel comfortable. Because of the previous volume, it was really, really high. It was really, really high. And on my 30-second time frame, the next 30 seconds, the volume didn't pick up. The volume didn't pick up. Of course, the 1 minute time frame right here, it's still okay. Actually, I would have held a little bit longer if I was trading on 1 minute time frame. But on interactive brokers, I was trading on 30-second time frame. So it gives me information a little bit faster. But sometimes it could give me like wrong information as well. So it's really a double-edged sword. But right here, I got out right there and it sort of rejected and I didn't feel comfortable. It's not making a lower low or a lower high, you know what I mean? So what is more reasonable? I didn't listen to my reason at that time. I sort of just felt it was kind of like, no, I didn't like that volume right there. I want to get out. If I got out right here, I would have made less money. But actually, if I had got out around here or even here, that would be a good trade. Even though I got out at a higher price. But to be honest with you, I don't think it was reasonable or a good trade. A good trade is that when you see that volume right here is high and you lost confidence, and that would be more reasonable. But sometimes, we have our emotions, and you have that gut feeling, tells you to get out. So I got out a little bit earlier. My faster EMA did not go below my slower EMA. So right here, this will be a good price to get out around there, which is $6.38. Okay guys, that's it for today's video, and if you like it, hit the like button and subscribe. This is Grant. Trade and invest responsibly.